This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Bill Reichert, general partner at Pegasus Tech Ventures. Pegasus Tech Ventures is a global venture capital firm based in Silicon Valley with over $1.5 billion in assets under management. Pegasus offers intellectual and financial capital to emerging technology companies around the world. Bill, thank you for joining us.
Thank you, Paul. My pleasure. I really appreciate it.
Great. So tell us about your background before investing in early stage companies.
Well, so I actually wound up here in Silicon Valley as a grad student at Stanford. And this is long before it was fashionable for Stanford grad students to start software companies. I wound up starting a software company and, spinning it out of Stanford. And that's how I got into this whole sort of innovation ecosystem thing. As it turned out, my first company was spectacularly successful out of the chute until one day it crashed and burned. And so that was kind of a problem. But the great thing about Silicon Valley is that in Silicon Valley, when you crash and burn, you pick yourself up, you dust yourself off, and then you spin the story a little bit, and then you go do it again. So fortunately, I got the opportunity to do it again. And I was actually asked by a couple of VCs if I could help save a company that was struggling. And I guess, they figured because I had crashed and burned that I knew a little bit about maybe avoiding crashing. That was, I don't know, maybe part of the thesis there. So I went in with a buddy of mine and we turned around a company called The Learning Company and we took it public. And so, kaboom, I thought I knew everything at that point. And so I dived into another company that, out of SRI, this unbelievably cool technology company. And we proceeded to drive that into a brick wall at about 500 miles an hour. So I got a little bit of humility at that point and, learned some other lessons on that one. I was able to do one more company, take it public, before I got a call from a friend who said, hey, how'd you like to start a venture capital company with Guy Kawasaki and a few other people? And so we got together and we started Garage Technology Ventures as one of the earliest dedicated seed venture capital firms that was focused on what at the time we called it venture capital. And our big goal was to fill the gap between angels and VCs. So that was our clever idea, among other clever ideas that we had around Garage. So that's how I got into the investing side of the world. And then a few years later, I ran into the founder of Pegasus Tech Ventures. And we saw a brilliant complementarity between what we were doing. And so we merged the firms. And so Pegasus acquired Garage Technology Ventures. And so now I'm a general partner at Pegasus. So that's what got me here today.
Well, great. So what excites you right now?
Boy, everything excites me. I got to tell you, it's an incredible world. And, in the olden days, we would talk about, quote unquote, the next big thing, right? So we were always trying to find, sort of what's the next big thing? What's the next wave? What's the next curve, right? And so now what's amazing about sort of the world of early stage investing is pretty much everything is trending. So I'm not talking about the bubble that we're in now of station. What I'm talking about is that venture capital and sort of private company venture investing now penetrates pretty much every corner of our world, of the business world, the entertainment world, the leisure world, our personal world. There are innovators and startup companies that are doing things pretty much everywhere. So that is, that's the sea change from, the olden days when venture capital was divided into two lumps. There was IT and there was life science. And pretty much everything fell into one of those two buckets, right? And then material science came along. And then that turned into clean tech and into some other things. And then, the world just exploded in terms of every sector now being open to venture. We've got, clean tech, we've got ed tech, we've got ag tech, we've got food tech, we got gov tech, we got reg tech, we got prop tech. What don't we have, right? We have smart cars, we've got smart cities, we've got smart buildings, we got smart factories. I mean, every part of the world has this technology opportunity for innovation and disruption. So, what I'm excited about today is sort of the last three entrepreneurs I talked to that have pretty amazing things going. So I got to admit, so the last time somebody said, "What's the future, Bill?" I said, "The future is RPA." That was the last time I made a commitment to a single sector. Very few people know what RPA is. RPA is robotic process automation. And it has nothing to do with robots other than, quote unquote, software robots. But the point of it is that the intersection between digitization, software, and AI is enabling us to automate all of these processes, everywhere in the world. So you think mainly about enterprise, banks and insurance companies and hospitals and healthcare companies and all that have a lot of processes that need automating. But everywhere you look, there are processes that are currently done, sort of painstakingly by labor that can be automated and simplified by using digital technology and AI.
Great. So you see a lot of startups and investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
We have a scorecard of sorts that we use to try to make sure that we're being systematic and deliberate whenever we look at a company, to make sure we don't get carried away by sort of one thing. One of the challenges as an investor is, frequently you fall in love with the company, right? I mean, that's actually a problem. It's actually important advice to entrepreneurs. So when we talk to entrepreneurs, we tell entrepreneurs, figure out what it is about you that's lovable, that's going to get an investor to fall in love. And so sometimes you fall in love with the team. This team, it's, a group of people, and they're smart and they're articulate and they are energetic and they clearly work well together. And so you just think, wow, this team, it seems like a great team. Sometimes we fall in love with technology. So sometimes, it might be the geekiest team you've ever seen, right? They come into our office, but they can make bits do things that bits have never done before, or they can make atoms do things that atoms, or they can make molecules or cells do things, right? So sometimes we fall in love with the technology, and that's dangerous too, right? We know that's dangerous, and then sometimes we fall in love with a vision, that this company, and we've done this, right? We funded this company. They had this vision. They were going to change the world. They're going to change the world. And it just gets so exciting. You get so wrapped up in it that, you just can't, you can hardly keep yourself from writing that check, right? So, we have a checklist. We have, this discipline that says, great, you're excited. We're very, we think this is unbelievably cool. But before we write the check, let's just kind of go through the steps to make sure we're not missing something here. And, one of the things that is, I can't go through the whole thing, but the single most important thing that we've discovered over the years, the single most important factor that you really need to tease out is, does this company have a compelling value proposition? So, mostly if you talk to investors, they'll say, yeah, it's team, or it's market, or it's traction, or whatever it is, right? But no, it's the single most important thing is, does this company have a compelling value proposition? Because, it seems obvious, right? But if you don't have a compelling value proposition, who's going to listen to you? Who's going to buy from you, right? So that's something that, you may be excited about the team. You may think the technology is cool. You may love the vision, but down where the rubber meets the road, there's got to be a compelling value proposition that's going to cause the customers, the prospects, to say, wow, that's amazing. You can do that. I got to have it, right? So, it sounds obvious, but it's so interesting to me how rarely entrepreneurs make it clear what their compelling value proposition is, and how often, investors get carried away by these other factors without really drilling down and understanding, right there at the point of intersection between the message and the prospect, is there a wow that is going to that's going to make it relatively easy and economic to convert prospects into customers and then scale the business. So that's a long answer to your question. What advice can I give an investor?
Great. And then on the other side of that table, what's your advice for startups raising funding? What do you tell that founder to do before they go out to raise funding?
Well, I touched on it. What we tell entrepreneurs is the high level bit on this one is, and something that I've learned over the years, is that contrary to popular belief, investors do not invest with their brain. And, this is the kind of the point I was making before. But entrepreneurs need to realize that the way to separate themselves from that herd of entrepreneurs that are pounding on investors for money, right? You got to separate yourself. And so being sort of good enough at explaining what you're doing is not good enough. You've got to get them to fall in love. Investors don't invest with their brains, they invest with their hearts. And what that means is you've got to get an emotional enthusiasm out of the investor somehow to get them to be willing to spend the time to do the follow-up and do the diligence and write the check. So you got to get them excited. You got to get our hearts beating faster, right? You got to get our pulse racing. You got to get us to say, wow, that's amazing. And, wow is not an intellectual response, right? Wow is an emotional response. It reflects an emotional reaction, not just an intellectual analysis. So the advice to entrepreneurs is figure out what it is that you've got that is going to make you lovable, right? That's going to make an investor say, wow, that's going to make someone fall in love, right? So what is that S? What is that S? So frequently, it's, back to my earlier point, it is, you've got an unbelievably compelling value proposition. So my favorite, I got a bunch of these examples, but one of my favorite ones is an entrepreneur who approached me at a conference, came up to me and said, Bill, what if I told you that we could do big data analytics 100 times faster than the current state of the art without changing your hardware? And I was like, boom, wow, that's amazing. And in fact, what I did, actually, I blurted out right in front of the whole group. I said, I would guess that somehow you are lying to me. Somehow you're And the entrepreneur, she did not miss a beat. She did not flinch. She said, well, what if I told you we proved it with Major League Baseball last summer? And it was the fastest trip to our partners meeting that, we've ever done. She spent no deck whatsoever. She spent 30 seconds and convinced me to invite her company into our partners meeting. That is brilliance, right? That is brilliance. If you can pull that off, that's what you want to be able to do. So that sort of compelling value proposition is what you got to have. Now, another very different example is another company. I was a judge at an elevator pitch competition, and this woman gets up and says, "Hi, my name is Claudia, and we do special effects software for the entertainment industry. Last year, we won the Academy Award."
Wow.
Oh, yeah, exactly.
Whoa, that's good stuff.
Yeah. So then, she had 4 minutes to pitch. So she goes on for another 3 minutes and 45 seconds, right? And at the end of it, I said, "Claudia, you had me at Academy Award." What is it? So the advice to entrepreneurs is, you got, I don't know, you got 60 seconds, you got 4 minutes, you got 20 minutes. I don't care how much you've got. You've got to get our heart beating faster in the first 20 seconds. You got to get us excited about listening to you. And that means, you got to figure out what you've got that's lovable, what you've got that's going to make us say, wow. Because if you don't have something that's, compelling, that's going to make us say, wow, we're going to forget about you, in 30 minutes, right? That's the unfortunate reality of the business, that we are just constantly being bombarded by pitches. And so you got to figure out how to stand out. So that's my advice to entrepreneurs.
Great. Well, let's talk about the state of startup investing. How do you see the industry evolving from here?
So I've been around for a long time in terms of watching the industry evolve, over the decades, both as an entrepreneur and now as an investor. So what is clearly happening is it's like an ecosystem. When you learned in your biology class in high school, right, how ecosystems evolve, and they start out simple, and then they evolve to increasing complexity and increasing differentiation, and then ideally they also evolve sort of geographically in mass, and they expand, right? That's the sort of ecosystem model, and that's what we're seeing in entrepreneurship and venture capital. We're seeing this evolution, this ecosystem expansion, where you're getting increasing differentiation, increasing specialization, dramatic expansion, more and more startup companies, more and more venture capital firms, more and more angel groups, and then specialization within that. You've got, accelerators that are doing fintech, and accelerators that are doing hardware, and accelerators that are doing AI, and, et cetera, et cetera, et cetera. So I see that continuing and happening, just across sectors and stages, and then also across geographies. So the big disappointment about venture capital and entrepreneurship is, for the last 20 years or so, has been that it has remained relatively geographically isolated. that, there are a few islands of venture capital in the United States and, around the world similarly. I mean, Europe is doing much, much, much better as a, broad innovation ecosystem in terms of venture capital and entrepreneurship. But it's still, Europe is still like amazingly slow in terms of its development, up until recently. So now, interestingly, with COVID, one of the things that has happened is that, actually, there are multiple important things that have happened with COVID, but one of the things that has happened is it's flattened the world for entrepreneurs and investors. And so we made our first investment in India last year, investing in a company that we've never met face to face. And we had never before invested in a company that we had not met face to face. And we had never before invested in India. But, with Zoom and this whole experience of connecting with the world digitally, now that has happened increasingly, that entrepreneurs anywhere on the planet can get a meeting with VCs in Silicon Valley. And so that's an extraordinary change. The other big evolution has been partially because of COVID, but for a variety of other reasons. There's been a huge influx of cash into the venture capital asset class. And, I hate saying this because entrepreneurs, it's still really hard for entrepreneurs to raise money. And, when entrepreneurs hear people like me say that, they just say, well, where's mine? Where's mine? And I know, I'm sorry, it's hard. But so what's happened is, kind of unfortunately, but most all of that huge influx of cash has gone to the later stage. And it's gone to relatively few companies that have become unicorns not because they necessarily deserve to be unicorns, but because you've got so much cash around the planet that's looking for returns. And there's no other interesting asset class out there, right? I mean, do you want to invest in commercial real estate, right? No. I mean, do you want to put money into bonds? I mean, no, you're not going to put money into debt, bonds. So where are you going to put your money? The choices are equities. And then, in terms of, yes, you can get good returns in public equities, but you can get great returns in private equities. And the only other interesting asset class, I'm afraid to say this one out loud, but the only other interesting asset class is crypto, right? So that's which is that's a whole nother conversation. So all this money has flowed into venture, and that has created an explosion in funds and in participants as angels and angel groups, and the creation of innovation labs and accelerator programs. And governments have jumped in too, because every government wants a piece of this innovation action. And so there's just been a flood of money into the sector. And so, it's a dramatic expansion. I've been through a couple of cycles, right? So I went through the bubble. I went through the global financial crisis. I don't know how this one is going to evolve, but, it will evolve. It won't go back to where we were, but there will be some adjustment that will happen. And you just want to be in a position that you're investing in assets that you are highly confident are going to sort of earn their way to their valuation in a normal time, even if the valuation seems inflated now. So that's been our focus, is to make sure we're looking for category creators and category leaders that it doesn't matter kind of what the stock market is doing, they're still steadily growing and creating value as they expand their businesses.
Great. Well, in the last minutes that we have here, what else should we cover that we haven't?
So what we should cover is my new book that I co-authored with a woman, professor, PhD named Angelica Blenstrup. We got together to write a book to try to help global entrepreneurs be more successful and effective at reaching investors and raising money. And you're not going to believe what the name of the book is. The name of the book is Getting to Wow. So hence my emphasis on wow. So we wrote a book called Getting to Wow. The subtitle is Silicon Valley Pitch Secrets for Entrepreneurs. And so we talk about all of the common wisdom around pitching and venture capital and entrepreneurship that is simply wrong. That there are just a lot of pitch coaches out there that are doing damage to entrepreneurs, because the reality is that pitch coaches are almost always presentation coaches. That's their skill set. And what people don't fully appreciate is that a pitch is not a presentation. So a presentation is, you got a fixed amount of time and they're going to sit there and they're going to listen and they're not going to interrupt, right? That's a presentation. So if you've got a presentation, you can create this arc of a story that you tell, like a TED talk, right? And that's what pitch coaches are teaching people. And that's fine in some cases, but a pitch is a highly interactive back and forth between an entrepreneur and an investor. And when you are pitching, you don't really know that you've got more than 20 seconds, right? So you better grab them. You better grab them in 20 seconds. And so, one of the points we make is that 95+% of all the pitches you make as an entrepreneur are going to be less than 30 seconds long. And entrepreneurs go, no, right. I mean, elevator pitches, it's 60. No, Bill, you're wrong. And I say, no, you don't get it. Every time you open your mouth, you're pitching, right? Almost every time an entrepreneur opens his or her mouth, they're pitching. You meet someone at a conference, you're introduced at an event, you got 20 seconds, right? That's your pitch window. You don't have slides. And, you have a chance to make an impression on a group of people. Those are pitches too. So you better be able to do a 20-second pitch. Yeah, then you need a 60-second and a 4-minute and a 20-minute pitch. But understand, a pitch is not a presentation. It is a back and forth. The metaphor we use is, it's much more like tennis than it is like an opera. Okay, so or a TED talk, right? So that's the point of the book. And so if you are thinking at all about pitching anything, it's designed primarily for high-tech entrepreneurs, but it applies to anybody who's trying to pitch anything in any situation. If you're a nonprofit, if you're inside a company, if you're working for a government trying to get a project done, you got to learn how to pitch. And so it's called Getting to Wow, Silicon Valley Pitch Secrets for Entrepreneurs. It's available at an Amazon.com near you. We priced it at only $9.95 because we wanted every entrepreneur on the planet to have access to thinking about how to be effective doing your pitch. So thank you very much for giving me the opportunity to plug the book.
That's great. So how best for listeners to get back in touch with you?
So you can find me at Pegasus. I'm Bill Reichert on Twitter. I'm Bill Reichert on LinkedIn. And I'm pretty easy to track down. And I'm pretty open to anyone out there. So, feel free to reach out to me. Now, I'm not going to guarantee you that I'm going to respond quickly. So that is one of my problems in this world, is getting through all my email. But I will respond if you reach out and mention the name of this program and say, hey, Bill, I heard you on Paul's podcast. I wanted to follow up. I disagree with you violently about this, or I couldn't agree with you more about that, or I've got a brilliant idea. Do you want a deck? Whatever. Feel free to reach out. Okay?
Great. Well, we'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks a lot. I really appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.